Hey guys, Mike here. So obviously big green day today in the market and every sector rallied pretty much. I'm going to go into basically why that was. Some big news coming out about a financial institution that could be in trouble. We'll see. That's going to be a big one. I'll tell you why that's a very big deal. And then we're going to go into some charts, talk about, some stocks that are holding up relatively shockingly well. Others that are holding people back from actually getting in the market at all, keeping money on the sidelines, and something else that is also keeping people kind of like, taking a step back going, might be a bear market rally coming up, might not be, but I don't want to jump in front of the train, so to speak. And, this is one of those rallies, I've showed these many times, I put no credence to it or whatever, is when every sector rallies like this, oil is up because OPEC's meeting this week, I believe Wednesday. The rumor is they're going to cut production to try to drive oil prices back up. Obviously, all the ARC stocks are up. That's what kind of rally this actually was, because they've been hammering like dog meat. But you go into the banks, I don't care if it's biogenomics, I don't care if it's hotels, travel, you name it, they're all up right here as you can see, except for a couple of them. I mean, Karma Cruise Line is a hot mess just because of all the debt it's got. I'll be surprised if it's even around in 2 years. You got all your metals going up today. Got all your crypto stocks and your crypto going up today. You got your safe haven stocks and the Walmarts and Targets and Dollar Trees and all that stuff you want to buy during a recession. You got your, the EVs, we'll talk about that, was a little off because of Tesla. But most of your Asian stocks are up. Your fintechs are up. Semiconductors up big today. They've been beat down. You're sitting there with your big boys up, all green, except for Tesla because they failed on the delivery numbers, and so they're down 8%, which is huge for Tesla to be down that much in one day, of course, and the market still be green, which is shocking. But then you got the VIX dropping down like a rock, and then you got all your indexes above 2%, almost 3% on the day when they finally closed. And of course, we've talked about this. What's the real reason? It's just right here. Look at the bearishness. It can't be almost any worse, as you can see. You have to go back to 2011, I guess, was the only time we were more bearish than we are now. So I've talked about that repeatedly. The fear and greed index is still below 10. NASDAQ 100 is still below 10 as far as stocks above 200-day moving average. Stocks above 50-day moving average is below 10. It is as bearish as it gets. The sentiment is a hot mess. You can see right here, this is the composite sentiment indicator signaling a tactical buy for global equities. And we can see right here, there's the line over there. I'll draw a line across so you can see this, how bearish sentiment actually is. And this is a definition. If you want to zoom in and read it, feel free to read it. There's different indicators this takes into account, which I think a couple of them I just said. But the point I want you to get across through here, no matter what we're talking about, whether it's global, whether it's just the United States, the bearish sentiment is just terrible, right? And rightfully so. The economy is going down the tubes. Worldwide is a mess right now. There's nothing to hang your hat on and go, oh, everything is looking great, except the fact that, people are still employed and still have jobs, and there's plenty of jobs to look for in this country at least, right? And so that's really what we got to hang our hat on until we get through this quarter and next quarter at least, and into 2023. And then you look at Chinese stocks, cheapest ever. Price to book hit the lowest for China share of the Hong Kong in the history of the market. I think it was about 2001 right here. And so, yeah, nobody's touching China stocks. They're staying well away from these stocks right here. And you can see, look at that, lower than it was during the dot-com bubble. And so, yeah, that's where we're at on that. And one thing that kind of shook the markets a little bit over the weekend and this morning was about Credit Suisse. And I think their CEO has sent out a memo or something trying to calm everybody down, but just saying they were trying to raise capital. And so this is those things. I'm not even going. People have covered it in nauseum today. You can fill another channel if you want to. A lot of people putting out the fear mongering. Oh my God, here we are with the Lehman moment. And who knows? But I just want to be able to make the point to say this to me is the thing that would absolutely send the VIX over 45. Finally, give us that cascade moment in the market where it just plunges, right? Another 20, 30, 40% is when a major financial institution actually is at risk of going under and needs to be bailed out. They're going to continue to call it the Lehman moment because that's what happened in 08. Everything's going down, then all of a sudden, boom. And basically because what happens is you get this fear of contagion because these guys are all intertwined. All these financial institutions are intertwined together. They go to lunch together. They dine together. They date each other's girlfriends and husbands and everything else. And I'm not even joking about that. And so, you know, they're all buying each other and selling each other stuff all the time. So it'd be concerning if Credit Suisse does have a problem. And we'll find out with their report earnings this month if they do have problems with their default swaps and stuff, because they're the ones that kind of provide insurance for everybody. And so, you know, is it an AIG type moment? Is it a Lehman Brothers? We'll see. But it kind of reminds us, I found this meme right here. This is what it reminds me of. This is what happened in 2008, but when Lehman Brothers. But anytime there is this fear of a major financial institution going under and having to be bailed out, this is what it looks like.
What do you mean the bank is out of money? Insolvent? You only have enough cash for the next 3 customers? Hey, just a second here. No, I don't have your money here. It's in Bill's house and Fred's house. Hey, what the hell you doing with my money in your house, Fred?
And then, of course, you know, I can't help but bring this one up because this is kind of, and if you see something similar to this is when people are going to be like having memories of 2008 right here.
Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. This is really, look, if there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly. Don't be silly.
Okay, just so you get a sense of what's causing the agony by this point, I know you've been talking about it. It's financials led by Bear Stearns after what essentially is a bailout from the Fed. Bear Stearns shares are down 90% this morning, and it's not just Bear. Pretty much every single bank is plunging in early trade this morning. Lehman, which is very similar to Bear and its reliance on fixed income, is down nearly 30%. You have big names like Goldman Sachs down 8%, Citigroup down 8%. So it is pain across the board this morning, and as you know, it all emanates from the shock this weekend that J.P. Morgan, along with the Fed, was going to be bailing out Bear Stearns for $2 a share. This is a stock that recently was trading at 80. Last year was trading at 160. It is the 5th biggest bank on Wall Street. It is significant in that it is establishing a price for some of these hard-to-value securities, and as you are well aware, that price is pretty much zero.
And please hit that like, subscribe button, and share the video if you get a chance. I certainly appreciate it. And so, yeah, that right there is what could absolutely bring the markets down faster than anything. And so when that Credit Suisse came out, and again, we'll find out. I think they report on October 23rd this month, I believe. And so we'll find out if that's the case, if they need to be bailed out or whatever. But I heard rumors all weekend, stuff flying around Twitter. And so we'll see. You know, we'll see what happens, because I thought it was funny. Their stock was down 10% pre-market, ended up only down 1% for the day. So I guess people feel okay about it. But you know, if there is a financial institution that's going to go under, you'll see a major bailout. There's just no ifs, ands, or buts about it. But if it's going to happen, it would happen in an environment like this, where rates are going through the roof, where, you know, free money is not free money anymore, and it's going to be hella expensive for a lot of these companies, financial institutions, to refinance debt, take out new debt, all of that stuff. And so you'll definitely be hearing a lot about the credit markets and the debt markets and everything else. Like, they're on Front Street right now. But, you know, looking at some charts, I was just looking through this weekend, and what's shocking to see is, you know, you look at a stock like PayPal. I mean, this thing has held up significantly well. And let me emphasize, when I say held up, I mean held up well since around April, May. Not like going back to last year. They've imploded from that. But these stocks have based out over the last couple of months and held up actually well, because I told you, when big institutions are buying, when big money's buying it, it will hold up. And they have absolutely held this stock up, because it ain't going down hardly really any at all compared to the other companies. And it's around April, May. All right, I mean, it's holding up better than the big boys, the big FANG stocks and stuff, which we're going to get into. You know, then one that really shocks me is Roblox. I mean, I can't believe this stock. It told you it based out here. I showed you when it based out, went on a huge run. You know, it's been selling down, basically bouncing off this trend line. But, you know, considering the kind of company it is, the kind of market we're in right now, it has held up remarkably well. I mean, it was up nice today, but I think it just continues to stay between like 30 and 42, somewhere that keeps bouncing back and forth. And again, that trend line I drew in there, it's been bouncing off it multiple times. We'll see if it keeps heading down or it can break above that. but just surprising how well it's held up. And it's around April, May. And, you know, the scary part, though, when you're looking at this now, we have the kiss of death, and we're looking at long-term, maybe in recession, all this stuff. What's really scary is what's happening to the generals right now, right? And you look at Microsoft, I mean, what are you looking at here? You're looking at lower highs going since basically November of 2021, lower lows. And so it holds such a big part on the NASDAQ and the S&P. And so that is not a good thing at all. And then obviously it continues to decline, as you can see, because a lot of people are hiding out in this stock for quite a while. And you can see it's below all its, obviously, SMAs there. And so there's really nothing bullish here when it comes to Microsoft. And I look at this chart, and when we sit there and go and look at Tesla, for example, down 8% today. Again, you know, what's happened now? It's broke down below today, below that major support line right there for it. And it's got this trend line, which has bounced off of many times, going back about 8 to 10 months. And it's heading there. It's only about 1.5% away from it, I believe. So that's another one we got to look at. If it breaks below that, where is it heading? Apple, the big dog, 7.5% of the S&P. I forgot what it is on the NASDAQ. It's probably over 10. You can see it just broke down below that major support level. It's trying to fight back above it now. But again, this is just one of those stocks that if it breaks and starts falling, you know, you could easily see this get down between 1 and 120, right? 100 to 120. And that's huge just because of the weight it holds in all of these indexes. And I mean, this channel it was in right here, if we go back, you know, this channel, I guess it's been in this channel since 2013, before 2020 broke out. And so, you know, a lot of people are saying, hey, why can't it get back to that channel? I mean, is it too much to ask? I don't know. I mean, that's a good question. So again, if we go through a major drop, yeah, that channel will be the target to look for. And you're talking about Apple below 100. So that's another big thing to look at. Another one's Google. Obviously, this trend line right here goes pretty far back, and it's been hugging it for the last few days, just trying to hold on for dear life. But if you go back, I mean, this trend line's been there for a while. It has rejected off it multiple times. It has bounced off of it multiple times, going all the way back to 2012. And so, again, not down to the exact penny, not in the exact science. But, again, you can pull up any stock chart. I'm telling you, these things love, especially these long-term trend lines and support lines. And so it's hugging it. I mean, it's just sitting there bouncing and bouncing and trying its best to maintain this. But if it breaks, you know, we're definitely heading straight down to 2020 high for sure. I mean, there's no doubt about that. But you're looking at a range anywhere from 70 to 90, somewhere in there. If I just kind of draw this box up right here, which I know is a big range, but, you know, that's what we're looking at. And these are the stocks that hold a major weight, you know, in these indexes. And so that's something to look at. And then, you know, Meta. Oh boy, Meta is just a hot mess. But anyway, I was going to talk about it because what's it been hugging and what's it been breaking lately, or fixing to break, is its 2020 COVID low. It actually broke it, and now it keeps trying to just hold on to it for dear life. Because if it breaks that, and that actually goes all the way back to 2017, you know, then obviously it's heading quite a bit lower. And you're talking about a company who's a cash cow, but you change your business model, this is what happens. And the stock that's probably in the most trouble to me has got to be NVIDIA. I mean, this has just been a stock that's got an absolute hammer. Let me draw this trend line for my personal reasons here. But, you know, this one right here is just a hot mess because it's sitting on a support level. And, you know, every support level below it, every time it breaks the support level and goes down, we're talking about like 12% every single time. And the reason why I can do this is because if you look, it just moved up so fast that there really wasn't any like time to consolidate when it moved up in 2020. It just skyrocketed up so fast. And so there's a little support. When I say these support levels are minimal at best, right? And so for us not to go to the COVID highs, I would be actually stunned if the market sells off. I think we're definitely heading there. I think it's going to break these supports extremely fast because semiconductors have been killed. And so again, another, you know, big cap stock right there getting killed. And the other thing that's held people back from really coming off the sidelines is, remember, we had never hit a bottom in the S&P unless we're above 45 on the VIX. 45 or higher, that is. Well, the highest we've been is 38. And the VIX is hard to chart, but you can get some trends going here. And the one thing that got everybody kind of nervous was it broke above this trend line, which had been bouncing off since the beginning of 2022. And the VIX had been setting, higher and lows that whole time when everybody got, oh my God, is this a breakout? Will end up being so far a false breakout because now it's came back below. It's setting at 30. But any of these trends you can see, it bounces off of multiple times. And then when we came up in August, it basically broke the trends, right? It broke down below the bottom trend line. It broke that top trend line. And so, that's just something, and you can see it bounce off that multiple times. And so, obviously, if this thing went to 45 or higher, the market's going down fast, and it's going down a lot lower, so people didn't want to jump in front of the bus, but they're also afraid to short because if it rejected off there and started dropping, that means the market was going up, and it was going to go up pretty dang fast, and shorts would have to cover. And I think a lot of people are just kind of waiting to see, like, what's going on. Is it going to start breaking down again? Because obviously the VIX starts going down. We get this rally. Everybody that's bearish, especially the bears, and I'm sorry, not the bears, but the shorts, right, are going to get caught with their pants down. They're going to start covering, right? And some of them will have to be forced to cover. Some of them will start voluntarily cover, which of course pushes things up extremely fast. And then of course you get the same narrative as always. The news will come out and go, oh my God, it was the bottom, you missed it. And then retail will say, oh my God, I missed it. And then retail will jump in. And then when everything feels good, the shorts will go, okay, we're going to go ahead and start shorting again, which means, of course, when they short the stock, they sell the stock. And so that starts flooding, the market starts going back down. And so I think that's kind of where we're at. But yeah, if the generals, the big boys, continue to show this weakness and continue to sell off, and I'm not trying to be, I'm not a bull or a bear, I just follow the data, and that's what you've seen recently. I mean, you're seeing stocks like, Roblox and PayPal and all these other ones that have these bases built out, they're holding up pretty well in the major sell-offs, right? But what's not holding up? It's the big boys now, the stocks that everybody's been hiding out in, right? Now they're like, okay, well, if earnings are coming down, let me get my money out of that, right? And so, because those high growth stocks, have just been killed. I mean, when you're down 70 to 90%, you can still go down, but whoo, and the big stocks have only been down, like especially like Apple, only down between 10 and maybe 30% versus 70 to 90. Big difference, right? And so we're just going to have to see how it goes. I mean, again, the name of the game is volatility. The question is, where's the volatility going? Is it going up, or is the VIX going to start heading back down? That's what we don't know. And eventually, I think everybody knows there has to be a capitulation moment where that VIX spikes 45 or above. It's happened every bear market. Eventually has to happen. What's going to cause it is the question. Is it going to be a Lehman moment? Is it going to be a financial institution going under? That would be my guess more than anything else. But, you just never know. Or it could be, I don't know, earnings, I guess. Some really bad earnings. But so that's kind of where we're at. So anyway, just want to put that out to you. Share that data. Please hit the like and subscribe button if you get anything out of it. Let me know in the comments your thoughts, of course, and where you think all this is heading, because I always like reading the comments, and I appreciate all of you who put comments down there and support the channel. So I really appreciate it, guys, and I'll see you tomorrow.